Welcome to the Ackermann Group podcast. Let's dive deep into the industry insights of the multifamily, real estate investing, and property management world as we establish Ackermann Group at the forefront of industry change. Hi, welcome to Ackermann Group, the podcast. Today we have Jeremy Constatino, who's our investor relations manager. We're going to talk a little bit about what to look for in an investment firm.
Thank you for having me, Lily.
Welcome. So do you want to start by just telling us a little bit about your role here at Ackermann?
Sure. Yeah. I'm the investor relations manager, currently servicing over $250 million worth of investors' investments into our multifamily investment projects here at Ackermann Group. So I handle the full cycle of the investments invested here. So that goes from subscription process through capital calls, all the way through investor reporting, investor documents going back, distributions, of course, is really important. But yeah, $250 million of capital invested into almost $1 billion worth of real estate assets here in the Midwest and Southeast.
Wow, that's awesome. Great. So do you want to just start by going over some of like the key factors for, when someone might be evaluating which real estate firm they want to invest in?
Yeah. So regarding picking an investment company to work with and which company to invest in is a very similar process to other different types of processes that you may be used to. So think of picking a general contractor to come into your house to remodel a bathroom or kitchen. You are going to want to do a lot of due diligence on that general contractor to have a lot of trust that they will remodel your kitchen and your bathroom. So that is very similar to what the approach of doing the due diligence on an investment company like us. At the end of the day, if you would summarize it into one word, it would have to be trust. Do you trust that service provider to do what he says he's going to do?
Yeah, absolutely. I think that plays a really big part. And I think here at Ackermann Group, we've built a pretty good trusting base with a lot of our investors. But I know we talk a lot about our market knowledge and being able to share that. So do you want to talk a little bit about, why that's critical?
So, yeah, that's a good question. So market insights and market knowledge is directly tied to their history and their leadership in whatever their service are providing. So looking at track record is important at numbers, but also what Lily's asking me is really their leadership in their specific niche in whatever they're servicing. So so I would say the two most important things when looking at an investment company is what's their track record and what is their leadership. Specifically, how long have they been working together? So they may have history and experience in real estate in working for other different companies, but when the executives are all working together for the same company for many decades, that really shows that the company is very successful.
Yeah.
And then they know what they're doing. So now if you know that the executives or the investment committee has been working together for 2 decades, 3 decades, that they trust each other. So now that's a good thing that we can check and see about trusting them.
Yeah, that's awesome. I want to say we've had 30 years without any turnover in our executive suite. So, they've been working together for a really long time, building that foundation.
Absolutely.
Yeah. Do you want to kind of go over any of the, specific strategies or methodologies that we employ to kind of mitigate any risks that might be associated when it comes to investing in real estate?
Yeah. So Ackermann Group's approach to investing is all about protecting the investor's downside and limiting the downside. So we go after assets and real estate, multifamily properties that are already fully leased out, fully stabilized properties that are generating cash flow on day one. So right from the get-go, we're buying assets that are producing cash flow, and therefore that lowers the risks to investors. So going back to the most important thing of picking an investor, an investment company, is looking at their track record. So like I'm saying right now, I'm talking about cash flow from the assets is one important thing, but also how much distributions have they totally distributed over the entire life of the asset. Um, that's equity multiple, and then putting that time stamp in there is the IRR, the internal rate of return. So those three, you got to always look at the track record. And so it is really important when you look for an investment company to real estate investor company to invest in, to ask them for a full detailed spreadsheet of all their investments that they have done. And it should have those three key metrics in there for both the realized properties that they've sold and as well as the properties that are currently active. So they should easily be able to produce their detailed track record. So it's also important not just to look at the numbers, but also to look at the type of strategy that's employed in those numbers. So if the open investment is for value add, you want to make sure that they have good returns for value add. If it's core, you want to make sure it's core or opportunistic. The same thing with markets. Have they succeeded in investing successfully in the specific markets that they now have open? And then also, is it the same team, which kind of goes back to what we were talking about earlier, is did they have the same team in place?
Yeah.
So there's a lot of nuances from, if somebody just says, I have a good IIR, a good equity multiple, but you're going to need to look underneath. Is it applicable to the current strategy that they have open to invest in?
Yeah, absolutely. And I think, one of the key players in that is transparency and communication between the firm and the client. And so, what are some of the ways that Ackermann kind of ensures the importance of transparency and communication?
Yes. So that's huge. And that has to do with throughout the entire life cycle of the investment. So some investments may be 3-5 years long. Here at Ackermann Group, ours are normally 10-12 years long. So we hold the assets for a long time. So during that whole time, every quarter we give out investor reports, quarterly reports outlining the state of the market, the state of the asset, and do investor calls and presentations as well. So when choosing an investment firm and company, you want to ask for the examples of types of reports that are given on a quarterly basis, so that you'll have an understanding of before you invest what kind of communications you're going to see and how transparent they are.
Yeah, that's amazing. And I think too, when you're taking on something as big as choosing which firm you're going to invest in, there's definitely, some mistakes that you might make. What are some of the common mistakes that you see that people might make when they're choosing what firm, and what are some ways that they can kind of avoid them?
So that's a great question. Is you want to call and email the references that are given to you, and if there are no references, you need to ask for the references of investors that have invested in previous investments with that company. Call them, get feedback. Always check the references. Another one is actually go visit the headquarters, go visit some of the projects that are ongoing. If they're in development, go on the construction site, and then obviously the assets that they're holding, go visit, meet the property managers, meet the leasing agents, talk to them, and you'll get a feel for the culture of the company if you actually go visit the property. So I would say that's probably a big mistake, is not going to meet in person. But also the personal touch is really important, because like I said, the investment cycle is a long investment cycle. So you're going to be having to deal with people like me, the investor relations manager. And so do you like me? Do you like the team? Because it is a partnership. It's a long-term partnership. So it's due diligence, and it's a courting phase as well too.
Yeah, thank you. I think those are some really great insights to kind of come to a close. If you had to choose one piece of advice to give to someone that was considering investing, what would that be?
Yeah, and it goes back to trust. One word, trust. You want to be able to trust that the investment manager and investment company and the people are going to do what they say they're going to do, and deliver the returns like they say they're going to return. So each one of the things that we talked about all has an aspect of trust, and each one of those due diligence items that you do will help either realize that you're not going to be able to trust them and you should move on, or that, okay, I can trust them and go ahead and go for a partnership.
Yeah. Thank you. Thank you very much.
Yeah,
I think,
you're welcome.
that was great.
That was great.